But there's something that we really have to get to the core at, which is that tariffs and totally rebalancing and reshaping global trade for President Trump is like a religion. I mean, we can all talk about the art of the deal and that maybe all of these aggressive tariff threats are just a ruse to get deals. We hear about deals, we haven't seen any yet. And time is more or less running out before this starts to truly impair President Trump's credibility. But just remember that Donald Trump went on this tariff and trade crusade vocally and emphatically back in 1987. And he didn't let up when he was a private citizen, and he hasn't let up in both of his terms as president. He has stated on record many times that tariff is his favorite word in the dictionary. And what I go back to, because you mentioned Liberation Day, back on April the 2nd, to which I have been saying, liberate us from what? Our sanity. And you go back and you think about why were there reciprocal tariffs with crazy numbers and different numbers on all these various countries, is because of what this additional levy on top of the 10% baseline tariff, what they implied. Each one of those numbers was really a quotient. It was a given country's trade surplus with the United States divided by their export base. And that was the reciprocal tariff. And the hidden message behind that was that is the number, country by country, that would totally eradicate, totally eliminate that bilateral surplus that country A, B, C, and D were running against the United States. So you have to dig through, notwithstanding the roller coaster ride we've been on, and the threats, and then the reprieves, and then the alleged deals, that this is really the mindset of the president and his super protectionist team, which is that it wants, in the end, as its ultimate goal, the complete evaporation of trade surpluses from the rest of the world on the United States. That's the one thing we have to take out of this, is that is the ultimate goal.
I'm guessing you don't think that's possible. It seems quite outlandish.
I don't think it's possible, and I think it's irrational and totally impractical. And everything that we've been seeing, and I know that we're all focused on this minute by minute, hour by hour, day by day. It's been an incredible headline-driven market, but we have to understand, what the end game is and what the implications are, because what this is telling me is that the administration doesn't seem to fully comprehend how the balance of payments works, and that really troubles me, because the balance of payments by definition have to balance. So the United States does run a trade deficit with the rest of the world, but it runs an equivalent capital account surplus with the rest of the world. So what happens is that these accumulated trade deficits, primarily on the product side, are met with, they coincide with an equivalent inflow of capital into the United States, because the balance of payments have to balance. Now, it's an academic debate as to what drives what. Does the current account drive the capital account? Does the capital account drive the current account? But the balance of payments have to balance. And it's totally normal and apropos that the world's reserve currency traditionally does run trade deficits with the rest of the world. It makes perfect sense that the richest and the wealthiest and the most powerful country in the world runs trade deficits with the rest of the world. That is just common sense. But the view in Washington is that this is just stealing jobs and investment from the United States to its trading partners. But it just comes down to Sir Isaac Newton's, famous third law of motion about every action has an equal and opposite reaction. The United States benefits from these trade deficits by the capital account surplus, because what these accumulated capital account surpluses, what it's meant is that not only do foreign investors help fund the US fiscal deficit because they own about $9 trillion of treasury securities, but they also help fund the debt market for the corporate sector, because it's not usually discussed, but should be, that the foreigner also owns about $5 trillion worth of US corporate bonds. And then the big mama is the equity market. And everybody always talks about the buyer strike, the foreign buyer strike on US treasuries. But the foreign investor owns twice as many US equities as they own treasury securities. They own almost $20 trillion of US equities, which of course helps fund corporate America. So that's the net benefit